Over the last couple of weeks, Elon Musk has basically declared war on Twitter, making the decision to try and seize control of the company, at first in peaceful ways, but now in a violent, hostile takeover. Much of this has been taking place on Twitter itself, with some of it, of course, happening behind closed doors. But today, in this video, I'm going to explain everything that's happened and what's happening now and what we might see coming next. So first, a really quick recap as to what exactly is happening with Elon and Twitter. Well, Twitter is widely regarded to be a public forum, a place where people can go to speak and be heard, which gives credence to the idea that banning someone from Twitter or censoring what they have to say is akin to working against free speech. The argument against this idea is that Twitter is a private company and it can do as it pleases. It is not beholden to the need to defend free speech. Now, this debate has been going on for years and it isn't any closer to being solved today than it was last week or last year. And frankly, it won't be solved until we see the law take a firm position on it. That debate, though, right now actually doesn't matter at all because Elon Musk is using his opponent's own argument against them. They claim that Twitter is a private company and doesn't have to follow rules regarding free speech. Well, if that's the case, then Elon Musk can buy that private company and run it however he likes, and that is exactly what we're watching happen in real time. We are basically, right now, reading the headlines as an episode of Succession runs on in the background. So Elon at first tried to play nice. As I said, he bought up a significant portion of the shares of Twitter with his own cash, and he has paid taxes on that cash, let's not forget, and then he leveraged that position to get a seat on the board of Twitter so that he could try and push the company in the right direction. Twitter agreed to this, but they had some pretty stringent conditions that Elon would have had to abide to, including limiting his ownership to the company to just 15% and what seems to be some kind of behind-the-back deal about Elon not being able to tweet as he likes and being forced to present a unified front to the rest of the world. Now, that would have been fine, presumably, if it weren't for the fact that the board of Twitter is the very reason that Twitter is in the sorry state it is. So Elon went another direction and he made a formal offer to buy up every single share of Twitter for $54.20 each, which was about 10% higher than the public value of those shares when this offer was made. It of course also includes his favorite number in it, 420, which basically represents Elon spending an extra $160 million for the sake of a joke. Now, this was a formal offer. It was filed with the SEC. It wasn't just some offhand joke or tweet that basically could have come from anyone, but it really riled the world up as it showed that Elon was serious, and as we predicted, he started this process of a hostile takeover on Twitter. Now, right off the bat, some people seem to be mistaking what a hostile takeover is, and buying up all the shares like this would represent that. The problem is, some people think that this kind of takeover is always hostile towards the company itself, but that isn't always the case. Sometimes it's hostile towards the management of the company, the board, the CEO, and other major shareholders. Now, there is a good reason for this kind of move. Twitter is a dying social media company, and Elon has been pointing this out. Just under a decade ago, when Twitter went public via IPO, there was a lot of fanfare about the company. It was the golden age to grow a social media site, and competitors like Facebook would go on to literally dominate the industry. They would generate ridiculous levels of profits and see their share prices skyrocket. Twitter, on the other hand, stagnated. It was sitting at $41 a share when it first traded, and before Elon made his offer just last week, Twitter was sitting at a pathetic $33 a share, representing a negative 18% return over the course of 9 years. It is safe to say, in my opinion then, that Elon is doing the right thing for the shareholders of Twitter, not just for free speech. The company is stagnant, and if nothing changes, it will die. Parag came in as CEO with a remit to make the changes necessary to see Twitter thrive, but he has failed in that endeavor as well, starting an ambitious plan to grow users that he has so far absolutely failed to make a reality. Now, some shareholders have rejected the idea of this buyout, but it's not too clear why. The Kingdom Holding Company is one of the world's largest sovereign wealth funds and basically an investment firm run and owned by the King of Saudi Arabia. Now, this fund came out of nowhere and said that they reject Elon's offer because Twitter is worth far more than Elon is offering, despite the market saying otherwise. Now, Elon is understandably a little bit peeved off at this for good reason. Firstly, the board has opted to ignore what the shareholders think of this offer from Elon, unless of course those shareholders support the board, and this one does. Another major problem with this is the Kingdom of Saudi Arabia in the first place. Elon tweeted, Interesting. Just two questions, if I may. How much of Twitter does the kingdom own directly and indirectly? What are the kingdom's views on journalistic freedom of speech? Elon also paid attention to the fact that former Twitter employees have been charged with spying for Saudi Arabia against the United States. The implications here are clear. The motivations of an investment firm dedicated to serving the interests of the man who had a journalist murdered and cut up in his own embassy should not have a say in anything relating to American democracy. I really don't think that's a ridiculous thing to say at all, and I also don't think it's ridiculous to draw attention to the fact that employees spying for Saudi Arabia probably goes hand in hand with the platform's political importance and one of its largest shareholders. Elon clearly thinks so as well. This shareholder is clearly a risk to the American democratic system, and it clearly does not support free speech in any way, or Jamal Khashoggi would still be alive right now. Elon also made a point of showing how irresponsible it is of Twitter to reject this offer outright without even considering it, especially because the board of Twitter hardly own any of Twitter's shares, and it seems clear they are purely acting out of self-interest, trying to secure their super high-paying jobs despite their outright failings in actually developing Twitter into a successful, profitable company. Nick Short came out on Twitter and said, if the board of directors at Twitter reject the offer made by Elon Musk, then wouldn't the board be acting in direct opposition to the financial interests of the shareholders? Elon responded with, absolutely, it would be utterly indefensible not to put this offer to a shareholder vote. They own the company, not the board of directors. Again, Elon is right here. The board is not acting in the best interests of its shareholders and outright rejecting a deal that puts the value of Twitter far above what the market thinks is true and fair. This is, by my reckoning at least, the board working actively against the interests of their shareholders despite their fiduciary duty to work for them. Nonetheless though, despite being awfully suited to their jobs, the Twitter board is adamant that they are in the right and Elon in the wrong. They have refused Elon's offer without consulting the shareholders of the company, let's not forget, and they've swallowed a poison pill, a term used to describe a company willing to destroy itself in order to fight off a hostile takeover. So how exactly does this poison pill strategy work then? Well, the board set up a shareholder rights plan, which is exercisable if a party acquires 15% or more of the stock without approval from the board. For the next year this lasts. If anyone, or really just Elon, buys up more than 15% of the company, simply by buying shares on the open market as he is well within his legal rights to do, he would have to pay a premium to all other shareholders. Other shareholders would also be able to buy up new Twitter shares at a discount to the market value, which would increase the total number of shares and dilute Elon's holdings in the company. Now, this is difficult for Elon to get around, but it's not impossible, and it would certainly cost him quite a lot of money. What should we expect to see in the future then? Well, the official offer by Elon has not actually been responded to by Twitter officially, though it is expected to be rejected outright with no attempt to negotiate. Elon could also work with other private investors who also have deep pockets to try and take control of the company and oust the current leadership. As long as Elon doesn't buy up more than 15% of the shares, the board is not able to pursue this poison pill strategy and kill the takeover. Jack Dorsey already owns 2% of the company, Cathie Wood's ARK Invest controls 2% as well, both of whom are on very good terms with Elon and would likely side with him on any kind of vote. Elon could own as much as 15% himself. Larry Ellison has been tipped as someone who might work with Elon on this front. He is already on the board of Tesla, and reportedly he and Elon get on quite well. His company Oracle has expressed an interest in moving into social media as well, specifically targeting TikTok, but he could pivot towards Twitter too. He or Oracle, his company, certainly have the buying power and could buy up 15% of Twitter easily too. Oracle is literally sitting on a pile of cash $50 billion deep right now as we speak. There are no doubt other partners that Elon could look for as well, but already among just 4 parties, we can see that as much as a third of Twitter could be bought up really quite easily without Parag or the rest of the board doing anything to stop them. We then have the fact that actually, as of last week, we got an article from the Wall Street Journal preaching about how Elon Musk is no longer Twitter's largest shareholder, as Vanguard, the asset manager, increased the shares that they hold, and they now have 10.3% of the company, more than Elon's 9.2%. Now, people are trying to make this into more than it is, because Vanguard is a custodian. They aren't buying the shares for themselves, they're buying for their customers, and they're just holding them on their behalf. Now, this is completely baseless. I have no evidence to support this, but I strongly suspect that the people buying up Twitter shares over recent days are in support of Elon's takeover bid, not opposition to it. Now, these people have the right to vote according to their shares, regardless of who is holding those shares for them, and I'd wager that the vast majority of them would vote in accordance with whatever Elon wants, not against him. In short, Elon has plenty of options here, without a doubt. He already has huge amounts of influence over the board due to his huge stake in the company. He has ridiculous amounts of support from individuals also willing to put their money where their mouth is. He has rich and powerful friends who share his ideals surrounding free speech, and this means one of three things is probably going to happen next. Number one is that Elon will move quickly, call Twitter's bluff, sink billions into the company, and fight Twitter's board head on, probably at the same time as he sues them for irresponsibly abandoning their fiduciary duty. The second option is Elon moves slowly. He and his associates and his friends buy up ownership of Twitter through the open market, each party owning no more than 15% of the firm, and then as board seats are allocated and as votes on leadership occur naturally over the course of the next year or two, Elon's side slowly wins control and eventually cleans house. Finally, Elon could just change his mind, give up on Twitter, sell his shares, tank Twitter's price, and doom the company to failure forever. This is, in my opinion, the bad ending here. I wholeheartedly support Elon in his endeavor to improve the state of Twitter, not only from a social and democratic point of view, but from the view of an investor who would be livid with Parag and the leadership of Twitter after they have proven themselves to be so incompetent for so long. The simple reality is, if someone is running a company at a loss for 9 years in a row and they're not even growing to justify it as the share price slowly falls apart, that person should not have a job. They should not receive stock or salary if they are that incompetent. How any Twitter shareholder can support the current leadership and oppose Elon on a financial basis, I will never know. Of course, the reality is that those who do oppose this are doing so purely because they don't like free speech. They want control on what can and can't be said, and they're willing to own a crap company if it means they can control the narrative in the media. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world-famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you get from any savings account these days. Thanks for watching, stay stoic. Until next time.